Tonight we are live from Rotterdam, London and Scotland. Welcome to StockBox Premiere. Well, good evening everyone, and apologies for the slight late starting of tonight. There was some slight technical issues here at the Stockbox studio, but we are all set now, all very well. So hopefully no further problems this evening. So joining us on the panel tonight, our guests are Mark Sale, the CEO of First Class Metals, that's the ticker FCM, where we're going to be talking about the North Hemlo project. Ryan Lee, the CEO of Fulcrum Metals, introducing the company and the projects prior to the IPO. And Ben Turney, who couldn't join us on the last one because he was a little bit under the weather, the CEO of Kavango Resources, talking to us about the Kalahari Copper Belt. So people who've joined before will know the format. We'll begin with the 10 to 15 minute project specific interview, followed by the open Q&A for 15 minutes. And of course, this is your chance to put your questions to the director speaking using the live chat. If you can, do join in the conversation by using YouTube live chat or hashtag StockBoxPremiere over on Twitter. And do hit that like button or subscribe button if you're feeling generous. As always, the directors are bound by market rules, but they will do their very best to answer your questions. So to kick us off tonight, let's welcome our first guest, that is Mark Sale, the CEO of First Class Metals. So it's the second time you've been on, Mark. Good evening. Welcome back on. How are you?
I'm good, thank you. Yes.
Well, it's good to be talking to you again, Mark. Of course, we're going to be focusing on the flagship project, the North Hemlo property, which comprises of 423 single cell mining claims covering over 90 squared kilometres. The North Hemlo property is situated in an extremely prospective geological setting. 3 parallel mineralised trends have been identified north of the Barrick Hemlo gold trend, interpreted as lying within close proximity to magnetic anomalies. So to start us off, Mark, let's just take us through the asset then. Could you give us a bit of an idea why the North Hemlo is the flagship asset within the First Class Metals portfolio? Bit of an introduction.
Certainly, Mark, and thank you again for having me on here. Why is the North Hemlo the flagship property? Well, because it has such a variety of potential mineralisation. I think most people who are following First Class Metals will realise that up in the northeast area with it says you've moved. Do we have a problem? Oh, I'm back.
I can hear you.
Oh, okay. It's just I'm picking up an echo.
Oh, okay.
Anyway, I'll persevere even though I'm hearing myself straight after I say something. In the northeast sector of the North Hemlo property, anyone who follows First Class Metals will know that we have a learn and joint venture with Palladium One. Palladium One rose to fame recently with their Smoke Lake nickel copper deposit, which is 20 kilometres east of our West Pickle Lake area. They've been drilling the last 6 months, more or less on and off, on West Pickle Lake. Obviously, they'll be winding up for Christmas. The results that have filtered through so far have been most encouraging. I think I was recently quoted as saying they were spectacular. Thanks, James. But they are very encouraging results, and certainly the indication so far is that it continues to trend west off the joint venture area onto the 100% owned North Hemlo First Class Metals block. However, whilst Palladium One has been beavering away in the northeast, our exploration teams have been working further south. It's not that we didn't want them to work in the north, it's just that we progressed from the south to the north, and we found a lot of interesting material in the south which occupied our time, particularly around the dead Otter Lake showing. I didn't choose the name. I like otters. And that had a history going of 3.1 grams. So we've been tracing that structure from the Dennis Lake showing with a lot of visual encouragement. Again, there's a significant backlog in the assays coming out of the laboratory in Canada. So we haven't actually reported any assay values from North Hemlo at this stage. I'm actually flying to Canada on Monday for a brainstorming session with our technical crew. And during that time, I hope to appraise the assays that we have collected up until now. So we can look at North Hemlo, gold rich in the south, nickel copper sulfide down in the northeast. And in the middle, betwixt those two, we have a trend coming up from the Fairservice claim, which is a mixture of the two. It has gold, silver, and base metal component. So you ask why the North Hemlo property is a flagship property? It's because at this stage we have multiple targets. We have copper, we have nickel, we have gold, we have silver, and then work is ongoing. And my aim for this first field season was in order to generate enough interest that we had targets to continue the work in the next field season. And certainly at the moment, all the indications of the work to date are building up to a lot of work.
Okay, excellent. I'm told if you're getting a slight echo, I don't know if you've got the YouTube open on the stream at the same time. That might be causing that. I'm not sure, or if you can source some headphones, it might help with any potential feedback that's going on. But let me just go on to the second question here. Could you advise what exploration, both historically and recently, has been done on the property?
Historically, the exploration was, I won't say scattergun approach, but I think what you have to appreciate, Mark, is no one held the North Hemlo claim in the entirety that we currently hold it. And certain sections of it were held by different companies historically, and they undertook maybe airborne surveys, ground surveys, some soil sampling was done, some obviously rock chip sampling was done, but there was never a comprehensive systematic survey across the whole property. And that's what we've initiated. And as I say, we've been working from the south to the north, just because the access was better in the south, to be honest. And we do intend to get into the north next field season. In fact, we had started on the extension of the Fairservice trend when I pulled the guys off North Hemlo and asked them to focus on ESSA, which is not the flagship property, but if I can invigorate the conversation at the time, I will, because it's a very interesting property. What have we conducted? Well, we're trying to pull it all together. Before the field work started, we undertook a deep dive to assimilate all the historical data, and from the basis of that, we generated a number of targets which we've been following up systematically during the field season. However, the big change is that we undertook a low-level, high-definition magnetic survey over the whole of the claim block at 50 metre and in some places 25 metre spacing. That was helicopter borne, not drone borne. We've got the results of that. A company in Toronto has been interpreting the data, and they've produced a very comprehensive report, which I'm now reading through. And it's one of the things I'll be doing in Toronto next week, is meeting with them in order that I can do the face-to-face download of what's not written in the report.
Okay, and can you paint a picture, perhaps, of the neighbours in the area? We have spoke about in the intro there about Barrick. So Barrick has a fairly close proximity producing mine, don't they?
They do, and that's given me the opportunity to bring in ESSA, because ESSA sits between North Hemlo and Barrick. And Barrack is what's called the southern limb of the Hemlow Greenstone Belt. And characteristic of Hemlow is it's on a shear. It's particularly well gold endowed, and it also has anomalous molybdenum. Three other sub-parallel trends have been identified to the north of the Barrack southern Hemlow limb. Two of those last were North Hemlow, one in the southern part and one in the northern part. So that's a good plus. The third inferred shear Hemlow lookalike passes through the middle of Esser. And as I intimated earlier, I pulled the guys off North Hemlow in order that they focus on the shear that goes through, it dissects Esser. I wasn't going to say bisects. It dissects Esser. And I've always gone on about neurology and vector. That shear property has anomalous gold values associated with it, identified by our neighbours. So we conducted an extensive soil sampling program over that shear, 450 samples, we're still waiting the results. However, I digress, because that doesn't answer your question. Let's paint a picture of our neighbours, predominantly all dark, handsome strangers, male and female. Amongst that, we have Palladium 1, which has the huge Tycho project to the east of North Hemlow, which, as I alluded to earlier on, contains the Smoke Lake nickel-copper prospect, which I believe reported the highest nickel grades in the last decade that have been reported in Canada. I'll stand correction if somebody cares to, but urban legend says that's what they are. But you're right. To the south, Barrack, 23 million ounces, vast and current resources, a phenomenal deposit by anyone's standards. So yes, obviously, with the northern limb of the Hemlow Greenstone Belt, with these potential lookalike shears, that's an admirable target for us to look for.
Okay.
I could go on and say that further to the east is the Silver Lake sugar gold mine, 1.6 million ounces, I think. And then, of course, to the west of Hemlow, you've got the platinum mine by Generation 1. Further to the west again, you've got the newly commissioned predominantly zinc mine. So the whole area is gold endowed, but also significantly potential for base metal.
Okay. And will the company be drilling in 2023? I presume so, at North Hemlow.
That is our stated intention.
Good to hear.
Yeah.
And now a recent RNS suggested that the recent nickel discoveries at the company's West Pickle Lake JV could extend into the North Hemlow footprint. Could you expand a little bit on this?
Yes, I think we have to be optimistic, but proceed with caution on this. And I've got nothing but respect for the work that Palladium 1 is doing, but we must remember that they've earned in and they are managing the project. So we are subject to the information flow from them. We haven't seen it all yet. I hope to get together with Neil next week when I'm in Thunder Bay and discuss things in a little bit more detail. But certainly with the results of the drilling, the fact that they're interpreting it's open to the west, there's drill hole 76, which intersected significant width of ultramafic rock with alteration similar to these chronoid feeders, all enhancing the prospectivity of the north of the North Hemlow block. And certainly it's our intention next field season to get some people up there and do some reconnaissance on ground mapping, prospecting, etc. anyone who listened to Neil's very erudite eulogy recently, where he explained about the tongue-like rock, realizes that despite the great job that the Ontario Geological Service has done and that continues to do, we can't take everything for granted.
Okay, well, thank you for that. We will go to questions now from the audience. I did just get told that you are actually backstage in the green room twice. So so good you have to appear twice, Mark. So there's double entities of Mark Sale. That could be a reason as to why. So I don't know if you can see
There's two of me.
Where you've doubled up. Maybe you can just go back to the singular Mark Sale, and that might help the audio problems there. But with regards to some of the questions that have come in, I wonder if you can sort of start us off by saying, can you let us know what the current cash runway is for the company?
Sorry, say that again, please, Matt.
The current cash runway. Do you know what the current cash runway is for the company?
Well, we listed in July 29. We raised just over 1.4 million. Since then, we've expended quite a lot. However, you would be aware that recently we signed up the Sunbeam acquisition, the high-grade gold mine, which has been dormant since 1905, and associated with that, we did in effect a loan of £1 million and 250,000 pound drawdown, and the average price of those drawdowns is 17 pence per share. We've only drawn down one lot. The next drawdown is in end of January next year, which is a further £250,000. So at the moment, we're sitting with a treasury of perceived and real of over £1 million.
Okay, so it's a decent cash runway there you've got. Okay, the second question.
We certainly have enough. Without drawing, we have more than funds to carry on doing what we're doing for the whole of the next field season. But obviously, retracing one of your previous questions, the rotary troop machine is what it's all about.
Okay, excellent. Well, the second question I have for you, Mark, is that North Hemlo is a large block. Will you be looking for joint venture partners like the company did with West Pickle Lake JV?
Never say never. And if we were to receive a reasonable offer for part of the North Hemlo block, like Pesim 2, we would obviously consider it. However, as North Hemlo is our flagship property, we certainly wouldn't be looking to joint venture significant area of.
What is the Hemlo Greenstone Belt? I wonder if you can explain a little bit about that.
The Hemlo Schreiber Greenstone Belt is a, how technical shall we go? It's a very old parcel of metamorphosed mafic, felsic volcanic intercalated with sediments, which has been deformed and intruded by later granitic batholiths, and then further upset by regional shears, faults, and overlain by younger rocks to make exploration more difficult.
Okay, so it's a challenging area to work in, but it's very prospective for gold and other minerals. Is that the best way to sum it up?
Yes.
Okay, thank you. Okay, now there's a final question I have that came in prior to starting. I've seen some other ones have come in just as we've been live here. The current share price performance is bucking the current market trend. Why do you think?
Well, that would be obvious. The properties and the team. No, seriously. James wrote me some notes on that one. which I have in front of me, but my varifocals won't reach. You're right, Mark. We are bucking the trend. We listed under very trying circumstances, which we got through. We didn't raise as much as we'd hoped. However, we were able to raise pre-IPO money, which enabled us to take field work before we listed and make the most of the field season. This being so, we've had a news flow from the day we've listed, and the share price has obviously been enhanced by the fact that as a newly listed company, I'm not saying we're unique, but it's unusual for a newly listed company to be having drill results so soon after listing. So I think it's a variety of attributes that has caused the share price to buck the trend. We've got good ground. We've been working it hard. James is doing an incredible job with the social media, Twitter feed and LinkedIn in order to get the message out there. I've even been known to make the odd video myself when I'm out in the field. We're really trying to keep the shareholders informed, which I'm not saying is a new or novel approach, but it's one that we undertook to maintain right from the beginning. So it's hard to answer your question. We've got good management, we've got good projects, we've had encouraging results, we've done a major acquisition, and we're keeping the public informed.
I think that's very important to keep the public informed, and First Class Metals do seem pretty good on that side of things. So a couple of questions have come in as we have been live. Here we go. So Sunbeam sounds like a very interesting project with potentially very high grade gold. What is the timeline for investigation here?
We will be conducting a detailed review of all the historical information we can put our hands on over the redundant field season, shall we say, the winter months, in order that come the fall, we're in a position to start exploring on ground and defining drill targets. Meantime, I will be remaining close communication with the First Nation groups in a continuation of our open, transparent attitude towards the guardians of the land, in order that at the earliest possible moment, and that is when mutually correct and we have obviously identified drill targets, we can pursue probably initially a modest drill program on Sunday.
Okay, excellent. Thank you for that. So another question here. North Hemlo, Dead Otter Lake mentioned, but sounded broken to me. Historic 3.1 grams per ton gold. Are we awaiting assays from here in relation to gold, and what is the current backlog at the labs?
The gentleman or the lady is correct, 3.1. And also significantly, almost 0.5% of molybdenum. And if you might remember, one of the characteristic features of Hemlo is not only its gold endowment, also the molybdenum. So yes, we're awaiting, I think, not far shy of 100 rock samples coming from Dead Otter. The reason for the backlog in the labs is just because it's a frenetic activity this time of the year, or up until the end of the drill season in Ontario, and the exploration industry is feast and famine. So when things are going really well, there's never enough drill rigs, there's never enough laboratories. But then when things crash, there's far too many of everything, including geology. So yes, we're waiting on a number of samples. Dead Otter Lake historical showing 3.10, 3.1 gold and significant molybdenum. I didn't get it right.
Well, thank you for that. Do we have any other questions for Mark? Because we are on now the sort of the end of your slot, if you like. It doesn't look like there are too many other questions coming in. I must say it was nice to see you in London, Minds and Money last week, Mark. Good to meet you in person. That show was very well attended over those 3 days. I think
Incredibly.
I think there's a lot of money, interested money, in the space. So that was a very good sign. Okay.
Oh, and Mark, can I just interrupt? One of the STM supporters did tweet me and say how relaxed I looked in the interview that you gave in Minds of Money. So you obviously bring out the best in me.
Well, I do try, Mark. Yes, I do try when we're not suffering with technical issues.
Yeah, I'm
But
hearing myself twice.
yes, well, you can we can try and diagnose that as you can take a break now, and we can come back at the round table at the end because we will now go straight to our second guest of the evening, and that is Ryan Lee, the CEO of Fulcrum Metals. Good evening, Ryan. First time that we're speaking. How are you?
Evening, Mark. I'm doing well. How are you keeping?
Very good, thank you. Thank you very much for joining us. I know you are mobile at the moment as well in a hotel room in
Yeah,
London.
yeah. You might have had your IT difficulties, but I've had my own transport difficulties today.
Yeah.
Um,
Okay.
Fortunately, I've managed to get myself into a hotel and be here this evening. So.
Good. That's good to hear. Maybe it's one of those days. Well, Fulcrum Metals is a mineral exploration company with projects in Canada, similar to where First Class Metals are operating. And it's a world-class mining region that is mineral rich. Obviously, it's a very politically stable jurisdiction as well. Now, the company is working on admission to AIM, and it appears that the finishing line of that long and arduous journey is almost in sight. So I'm quite keen, and I hope people who are watching are quite interested to see what you're all about. It's nice to get a bit of a heads up as a company IPOs, just what the company's all about, so that when they do hit the market, it's not this new surprise to everyone. It's actually got some following already. So to start us off, could you perhaps just give a very high-level overview of Fulcrum, the project, and if you can, the roadmap to IPO?
Yeah, well, thanks for the introduction, Mark, and it's a real pleasure to be here. So at Fulcrum, we have a portfolio of really exciting early stage projects. They're all situated nearby producing mines or, with highly prospective geology, or in areas which have seen a great deal of interest and a lot of activity. As a company, where we're positioned is in exploration. So we'll be going out there, making discoveries, and then we'll be looking to bring in partners to take these projects onto the next level into mine development and take the heavy lifting in the capex of those developments. So we have 4 project areas in Ontario. We have the Schreiber Hemlo project. We have high grade in gold rock samples. We have highly anomalous soil samples. We've got high grade channel sampling, and we also have a good portion of the project which is covered by high quality airborne survey. Just over, I think it's around 65 kilometers to the east, we have the Generation Mining project, the platinum and copper projects. 80 kilometers each, we have the world-class Hemlo mine, as Mark talked about earlier, 23 million ounces of gold. We have a Winston Lake project. Now this adjoins to the Metalum Lake Superior high-grade zinc copper project. Now this includes a couple of historic mines in there. So we have the Winston and the Pick Lake mines, both a couple of million tons each, grading well in excess of 10% zinc and around 1% copper. I think it ranks as one of the highest grade zinc copper mines in the world globally. And we have some geophysical anomalies on our properties which trend from these properties around us, which we're going to go out there and investigate. We also have a project on the Wawa Greenstone Belt, We've got historic gold grade samples in rock of up to 5.2 grams a ton. And around 30 kilometres away from us, we have two multi-million ounce deposits, being the Alamos Island Gold deposit, which is actually in production at the moment. Over 1 million tons of gold at over 9 grams a ton. 9 grams a ton. And there's also the Argonauts Gold Medino Gold project, which is under construction, and hopefully that will be in production sometime towards the back end of next year or into the early part of the year after. We also have the Dayo Hezra project. Now this area is so underexplored. There's very little records actually historically. The area is not even it hasn't really been geologically mapped, but it's in a really hot area. It's just east of the Palladium 1, the Tycho project, which again you heard Mark talk about earlier. It seems like they're opening up a whole new copper nickel district over there, so we're watching very intently to see how that develops. And we also have 2 uranium projects in the northern Athabasca region of Saskatchewan. Now that really gives us exposure to this rejuvenated nuclear energy market, which has kind of been driven by globally governments looking at getting to with ambitions of achieving net zero carbon, and also decarbonising the base load of power. So up in Saskatchewan, we've got the Charlotte Neely Lake project. We've got uranium grab samples, which quite impressively up to 6%. We have historical trenches up to 0.18% uranium, and we've actually found that there's a much forgotten gold target on this property. There's very little information within government databases, but what we have managed to do is obtain a driller's report from 1935 to 36. And within that report, now it's not verified, it's a report, so we'll have to do some work on this to verify this. But one of the holes in particular is from surface down to around 45 meters, grading at just over 3.9 grams a ton gold. And within that, there's just under a meter at around 44 grams a ton gold. So I think that stacks up with any drill result that you'll see in the world today. So we're really excited about that. And, we're in good company in that area as well. We're flanked to the east by 92 Energy. We've got Appear Energy to the south. We've got Fission 3. We've got Power Metals over to the west. Now our final project on this roll call is the Fontaine Lake project. That's a bit further east in this region. We've got uranium grab samples of up to 1.44% uranium. There's actually a radiometric anomaly in there as well. And associated with that, we've got uranium grab samples up to around 1.2%. And we've got anomalous niobium and tantalum as well. So that gives a really, really good kick-off start point for that project. Now on the IPO front, we actually started towards the back end of April early this year, which seems a long time ago now. Frustratingly, we've come across delays, and I think you can see across the board that many other IPOs have suffered the same. But we are working hard at it. I'm in London for that very reason today. We're working really hard to deliver a name listing as soon as we can. We'll hope to achieve that in January. So hopefully we'll be back talking to you guys pretty soon to talk a bit more about that.
Excellent. Well, everyone will know about the delays that occur with the London Stock Exchange and getting prospectuses sorted and getting IPOs across the line. So I think it's an achievement in itself when a company manages to do that. But what a great package of projects that you've assembled there. I mean, you're covering gold, uranium, silver, zinc, nickel. That's a very broad range and operating amongst big players in the space in a very prospective area. Out of all of them, would you say you have a flagship asset, a bit like First Class Metals have North Hemlo? Would you say one would be more of a flagship? And I just noticed you have your slides. Anytime you want to put them up, just let us know and we can flick them on the screen.
Sure. I must profess I don't know how to. Here we go. Okay. I'm not sure how to do that, so maybe we'll have to share that another time, unless it's coming up already.
I can see these slides. Are you able to see them or not?
Right. Okay, so here we've got a map of the Ontario projects, which I just described. Now you're kind of leading me here with, what's our flagship assets.
Yeah.
Now that would be the Schreiber Hemlo project, which you can see there. It's got a yellow box around it. It actually comprises of two projects called Big Bear and Jackfish. It gives us a really significant footprint, around 113 square kilometres. Puts us as a real dominant explorer in the area. And these projects are, it's 20 minutes by road. It's very easy to access. Now the projects, obviously, they're very close together. They share similar geological similarities, which is why we put these projects together, as a flagship, assets in the first place. Now, what it's really important to understand that, these areas are extremely prospective, but they're also very underexplored. So historically, these areas have been prospector-led. Claims held by individuals, and going out there chasing visible gold in veins at surface, rather than adopting a property-wide strategy or approach, and actually truly understanding the geology and the controls of the mineralization. Now, we're obviously have an agreement to acquire this Big Bear property off Panther Metals. So they actually commenced this property-wide approach at Big Bear. They completed high-quality airborne surveys, which has produced 39 high-priority geophysical anomalies. Rock sampling that they have undertaken has produced high-grade samples of gold up to nearly 54 grams a ton. And we've also got highly anomalous soil samples of up to 0.7 grams a ton gold. So, there's a lot of which you can see here. I keep forgetting to move these slides on. So there's a lot of targets on Big Bear for us to develop. So, if we look at the kind of the northern region, we have Little Bear area. It's in bulk sampling of 1 ton at over 1,400 grams a ton gold. That was back in the 1930s. And in the Schreiber area, we've seen 150 tons mined, reportedly at over 17 grams a ton. And Hayes Lake East, there's government essays returning exceptional values of up to 233 grams a ton of gold. So, and this is all really symptomatic of this kind of prospector-led exploration. So now at Jackfish, Fulcrum actually started this property-wide approach to exploration last summer. We went out there and explored a 1 kilometre area. We didn't go out there with any specific. We had a target area, but we wanted to sample all the rocks in and around that area to really understand what's going on there. And that returns some very, very encouraging results. We've got high-grade rock samples up to 39.8 grams ton gold, up to 1% copper, and importantly, we have anomalous gold results in the bedrock, which is in between high-grade gold veins. So this really lends this Jackfish area to a high tonnage deposit, which previously wasn't really thought of or recognised. This is the first campaign like this in that area, and we haven't even touched the eastern side of Jackfish, so that's for us still to look at. So really, what our job here is to link some of these mineral occurrences. There's over 38 of them documented. So link them, create drill targets, and go make a discovery as quickly and efficiently as we can.
Excellent. Well, that's very good. Thank you for that. Just on Jackfish then, and probably just generally as well across the project board there, any exploration that the company has undertaken in this pre-IPO stage?
Yeah. So, Of course, well, I'm going to expand that a little bit to actually the Schreiber Hemlo property, because that is our flagship asset. So, and we've been very active. So we've been out to Big Bear a good few times this year. We've been out to Jackfish last year. We've been out a few times this year. As I mentioned just now, we've conducted the first ever wider focus exploration campaign at Jackfish. We're very happy and encouraged at what we found there. There's several golden rock samples in excess of 10 grams a ton gold, all the way up to nearly 39 grams a ton gold along a 1.5 kilometer corridor. We found widespread gold mineralization throughout the area, and again, we still have the eastern side to look at. So we're really enthused with what we found there. At Big Bear, early this year, he was granted 4 exploration permits. So this covers all manner of exploration activity, from pitting, trenching, ground physical surveys, and drilling. So after we signed the agreement with Panther, what we decided is that the best thing for us to do would to naturally build on the information and the work that they had already conducted. And that would allow us to actually begin to kind of pinpoint exactly where we're going to go and put this drill. So over the summer, we've been out there, we've been mapping in much greater detail, we've been expanding sampling areas. We're really happy with what we've seen there. What we believe we've seen out there from the information we have at the moment is that we believe there's a regional scale shear zone that passes through this area in a single mineralized structural system. And this really is actually quite a groundbreaking moment for the whole area. We think that from Cook Lake through to the Johnson McKenna area, through to Pyramid Schreiber, which is kind of extends through that centrally yellow highlighted area. And we think that we'll carry on along strike, but the bedrock dips down into the overburden, so we'll have to do a bit more work there to see exactly the natural extent of that. What we also have done fairly recently is we commissioned a structural survey across the project. Now that will sit alongside all the data we've already gathered so far, and we'll be able to use that to better target when we send the crews out into the field. Now we've actually received that initial report back. We're still going through it, but on initial read, it's come back with 42 high priority targets. Some of these correlate really well with the target areas that we've already set out. And obviously, as we go through that information, we'll release more information in due course. We was also quite fortunate in that Transition Metals completed a VTM survey at their Maud Lake property earlier this year, and some of that actually overlapped some of our property up to the north. So we used that information and we went and targeted where we've seen these VTM extensions run through the property. So we sent the crews out up to the Sinai Lake area. And indeed, we found a bunch of real nice looking sulfide samples. Now they are at the lab, along with a whole host of other samples that we've taken. So I'm just moving along the slide here just to show some here we've got the Jackfish Lake area where we found nearly 39 grams a ton gold. This is the cliff zone, which is the far end of that kind of corridor that we found. Now this is almost like a cross dissection into the ground, so you can actually stand at the foot and see all these stacked veins. And this is just a photo of one of the areas where you can see the mineralization. And in that area we're looking at 25 grams a ton. This is unfortunately a photo of me trying to climb that area up to where we were finding these high-grade samples. And this is just a photo of the Cook Lake area where we see the banded iron formation outcrop. Historically, we've got samples of around 2.5 grams a ton gold. And it's kind of moving through that area. we've got this Johnson McKenna area, where again you can see this kind of prospector-led historic exploration and production. This is the remnants of the old mill that was there. And this is actually one of the samples we have at the lab. As you can see, very heavily mineralized. Pretty excited to see what those come back as. And as part of our kind of expanded sampling program, we had a look further north into the Tuomi areas, and we can see that we've got intrusive cyanide bedrock in there, which is mineralized, which we're pretty excited about as well. It's just a photo just to give you an idea of the size of the veins down in the Schreiber area. So, albeit at an angle, you can see that vein goes right across. Again, samples at the lab, which we'll be reporting back on soon enough. And this is just, I personally like this photo. It shows you the mineralization that we were finding in and around the Cyanide Lake area, following up on those VTM targets. And we have been out across all the other Ontario properties as well. And this is just quite a nice photo of some mineralized rock that we found up at Carib Creek. So we've been doing a lot whilst we're in pre-IPO. So there's a lot of news flow for people to look forward to.
Well, I mean, just on the news flow situation, it is important to be able to hit the ground running, I think, with regards to when you come to market. So are you able to give any idea on the roadmap for the company post-IPO?
Yeah, absolutely. So, I mean, our roadmap is very simple, and that is, we need to deliver on our motto as a company, and that is getting out there, exploring, going out there, making discoveries, and then scaling those opportunities to the benefit of shareholders. So, what that means in reality or in action, and that is to get out to Big Bear, conduct the first drill program in 2023. And obviously we'll follow this with further work towards drill targets at Big Bear and Jackfish. And we have lots of news flow coming from that kind of first pass exploration across the properties. And we will obviously, follow up on those results accordingly in the 2023 field season. But we're also going to commence a commission a remote sensing survey for the Saskatchewan projects. And I will really add onto the historical data that we have in defining further exploration targets that we can go out there and have a look at in 2023. So, in short, we're going to go out there, we're going to explore the rest of the properties in the portfolio, and we're going to get them to a decision point on what we do with those properties. This may mean prioritising certain projects, which are underneath the Hemlo-Schreiber project. And looking at using our capital efficiently.
Okay, excellent. Thank you for that. Can you let us know, if possible, how much money the company is looking to raise on the IPO?
Sure. So, as you can probably tell from what I'm the information that I'm relaying here, is that we've got a very well thought out exploration program and budget full of a lot of exploration, a lot of drilling. With an obvious focus on discoveries at Schreiber Hemlo, and generally generating project value enhancement activity, across the board. So we based all these projects on or activities on raising up to £3 million.
Million. Okay, that's good. There's a sort of a slight extra question on there about the float. Is that with regards to the how much float is expected? Is that regards to the number of shares that you want to issue? Is that right? Or
yeah, so obviously, we still have to have that discovery point on share price.
Yeah, on share price.
But based on the modelling the company put together, we should be looking at coming to market at around 8.5, 9 million pound market cap, around 50 million shares in issue, and somewhere in the region of 40% of that in public hands. But again, we have raised pre-IPO money. Directors have invested also, and there's certain locking periods. So it's difficult to put a number on that until we get to the point that we know where we're at with the fundraise. But we've carefully looked after the share structure.
Okay, well, I think that definitely covers that question off. So there's a couple more I think that have come in while we have been live. Are we able to get them up? How has the institution interest been in the company?
That's actually down to our broker, which is Clear Capital Markets. So we understand there's a good level of interest in the company. Obviously, we're a very active company. We want to make shareholders money. That's the the whole ethos behind the company, and our motto to go out there and find discoveries. So we'll have that. We've got a good indication so far, but again, we'll find more out in January. And of course, if you want to get involved, you can contact Clear Capital Markets directly also.
Okay, excellent. Will the company be looking to drill in 2023, and if so, where?
Well, I think I might have answered that a few times already, but our absolute focus is to get out to Big Bear and drill in 2023. All of our work over the summer and indeed currently heading into the 2023 field season is all geared up towards drilling in Big Bear. And obviously, as that develops, we'll release that news to the market. But we fully intend to get out into Big Bear, make use of those exploration permits that are there. We want to get out there and make a discovery.
Excellent. Well, that's what it's all about, isn't it? Getting out and making discoveries. I wonder, there's another question here I've got, the strategy on the uranium projects and the additional acquisitions in the same area that are prospective for gold.
Yeah, so I mean, for both projects, we're in good company with several larger listed companies in and around us. I think the first thing we need to do is have a look at the results of that remote survey that come in to add to the targets we already have there. I think in addition to that, the gold targets at the Charlotte Neely Lake project, we're advised that the drill core is on site in and around the previous activity. So we fully intend to get out there, try and recover this drill core, re-assay it, verify the historical gold recordings. And actually, you've got to bear in mind that this is 1935-36. These guys were only assaying what they can visibly see was gold or thought was gold. So we'll have to see. We'll have to get the drill core for that target, re-assay what we need to, and assay areas which were overlooked previously. So what we need to do is to get past that first pass of phase one to know exactly where we're at. We've got our flagship asset in Hemler Schreiber. So we'll look at all available opportunities to get those projects moving. Might be looking at bringing partners in or some other forms of divestment, but retaining an interest in those properties going forward.
Okay, excellent. Thank you. Just a final question, I think. Is the company going to be an entirely Canadian-focused vehicle?
I think right now we have a lot of a good number of projects to get us going. We've got a great deal of work ahead of us. So we're going to stay in Canada for the foreseeable. But obviously, every good company always reviews projects as they come to pass. If something comes along that's a good fit for the company, then we'll definitely consider it, obviously.
Okay, excellent. Well, thank you very much, Ryan Mee, for joining us tonight. I hope you can stick around for another half an hour or so for the roundtable discussion in a little bit. What I'm going to do now is to take a very short 2-minute break, and we'll be back with Ben Turney, the CEO of Kavango Resources. So we'll be back in a couple of minutes. Welcome back. Now let's welcome our final guest, Ben Turney, the CEO of Kavango Resources. Good evening, Ben. How are you?
Thanks, Mark. How are you?
Good. It's good to have you on. Now, of course, we missed you last time when you were unfortunately a little bit under the weather, but it's good to have you this evening. Of course,
it wasn't a little bit under the weather, Mark. It was pretty nasty.
Which is a prospective copper belt stretching 1,000 kilometers from northeast Botswana into eastern Namibia, and it has become the focal point for the discovery as what is known as sedimentary copper deposits. And Kavango is currently undertaking a large RC and diamond drilling campaign. So we do have a lot of questions that were pre-submitted to us for you tonight, Ben, but we will go through just a few to begin with on the project in general, but just bear in mind that we need to leave a little bit of time to get through those questions. So could you just outline to begin with the scale of the opportunity in the KCB and indeed the size of the CAV footprint in the KCB?
So we currently have about 5,000 square kilometres of prime exploration ground in the KCB. A lot of the easy ground in this region has been taken up by Sandfire Resources, who of course acquired Mod Resources a few years ago. So in the sort of the northern section of the belt, where you have a lot more outcropping at surface and geological indicators at surface, this ground is effectively being tied up. A bit further south to the belt, you obviously have the presence of these Kalahari sands. Now, Botswana is 70% covered by Kalahari sands, but it sits on the western edge of the Cap Vaal Craton. So in terms of its geological position, Botswana is a wonderful country to explore for large-scale metal deposits. But because of the presence of these Kalahari sands, it's limited historic exploration quite significantly. Our key USP at Kavango is our use of geophysics. So we use geophysical surveying techniques to try and penetrate through these sands to identify drill targets. In terms of the scale of opportunity, the Kalahari Copper Belt is probably one of the most exciting copper provinces anywhere in the world. These sedimentary hosted copper deposits, they have a lot of advantages over the porphyries that you see, for example, in southern America. And also, if you look at the Central African copper belt, which has been heavily explored, the Kalahari copper belt, which extends from Botswana into Namibia, is probably about 10% explored as it stands today. So there is a lot of ground to go for. There's a lot of opportunity. There have been a number of discoveries over the course of this year. And of course, with the copper price doing what it's doing and the expectations around the green revolution and the demand that there's going to be for copper over the next 10 years, the macro outlook is absolutely fantastic. So for an exploration company like ours, we know we're in the right postcode. We've worked extremely hard on working on our drill targets, and we're also deploying new technology with the CSAMT, and we'll hopefully get a chance to talk a bit more about that later on.
We'll get a chance to talk about some of that later on, Ben. But just a quick question on the current activity. Now, from recent news releases, there's a lot of activity on the drill site. Can you paint a picture of what exploration activities are currently ongoing in terms of drill rigs, number of shifts, core sheds, etc.?
Yeah, so there's a bit of a misunderstanding, I think, out there in the market about our original drilling. So we started off with RC drilling, which was on single shift. Now, I've seen some pretty stupid commentary about this, about how this was a mistake. And I'm afraid to say, sort of the people who were trying to put that message out there, they were quite deliberately trying to mislead the market, because anybody who knows about these things knows that RC drilling, you're using more dangerous equipment, the use of the hammer, the heavier equipment, it does pose a lot more risk. So it's from a health and safety perspective, which of course is vitally important. You know, we are dealing with potentially very dangerous equipment. You can really only drill on single shift with RC. Moving over to diamond drilling, just as we did in the KSZ and in Ditto, as we've moved through the gears in this campaign, we moved over to double shift. So currently we've got the diamond rig, or it's a multi-purpose rig, but it's currently diamond drilling. It's working in double shift at the moment. So there's a night shift and there's a day shift. In terms of the rest of the activity, we have a team that's supporting the rig. We've obviously got ongoing work in the KSZ with one team down there. We're doing a bit more soil sampling on some of our other licenses and a bit of infill soil sampling as well. And also, above all, we've got one team supporting the CSAMT team that's out in the bush that are currently taking surveys. They're cutting lines. So everyone is very busy. Botswana is about to break at the end of next week for the Christmas period. That will last about a month. So there will be a cessation of exploration, as there is every year. It's their equivalent of summer holidays in the southern hemisphere. And then we'll look to hit the ground running again in January. Excellent.
Okay, well, it's good to hear. Now, out of you've got 30, well, we talked about this before in interviews, the 37, nearly 1,500 meters of planned drilling. It's a seriously impressive target meterage of drilling. What realistically, though, are you looking to complete?
Well, potentially all of it, Mark. I mean, long term. You've got to remember that this is our long-term ambition. So we've recently raised £3.5 million, and with the best will in the world, £3.5 million with all the other work that we're doing on our projects, the other costs our business incurs, we're obviously not going to drill 37,000 meters in one go. But again, I don't think anybody is really realistically expecting us to do that. What we now have in the tank is sufficient funds behind us. We expect to drill somewhere in the region of about 10 to 15,000 meters in the copper belt. Now, that will be dependent on our targets. It will be dependent on the depth of the targets, and we can talk a bit more about that a bit later on. But it will also depend on the type of drilling that we do. So just to give an idea, RC drilling, which is reverse circulation, that typically tends to come in at about a third of the cost of diamond drilling, which is much more expensive, and it's where you actually extract drill core, so physical cores, cylindrical cores extracted from beneath the surface. So it will all depend on what the actual mix is. At the moment, we're now doing more diamond drilling than we anticipated. We hoped that this would just be an RC campaign, but very early on it became clear to us that we did need to make that shift to diamond. Now, in terms of next targets, we've got a lot more work that we're doing on those at the moment. This is very much a live program, and of course we're very much guided by the CSAMT results, which really are looking spectacular.
Okay, good to hear. Well, you mentioned there about the raise. That is an impressive raise of 3.5 million. That was from existing and new strategic investors. Can you let us know where these funds will be deployed? Will most of them be applied to the KCB or not necessarily?
No, well, thank you. I mean, it was a big achievement for the company raising this much money in this climate, you know, when a lot of our competitors are really running on fumes if they haven't already run out of money. So for us to have brought in this level of funds with new investors as well, Mark, so actually the vast majority of the money was from new people coming in, new strategic investors and new people that I'd pitched to, people who've really bought into the Kavango vision. We've obviously released a prospectus recently. Now that contains a budget within it. I need to clear up, I'm afraid, again, I feel like I'm a bit on the defensive this evening. There's so much nonsense talked about our company. In terms of the actual budget that's put out there, that's based around, obviously, our minimum spending requirements across our licenses. We have to retain our licenses. We make, obviously, a commitment to the Department of Mines about how much we'll spend on each license. So that part of the budget is based around the spend commitments. But in terms of what we actually expect to spend over the next 12 months, I'd estimate probably in the region of about half to 2/3 of the budget will go into the KCB. We've obviously allocated a lot more for the KSZ as well to do a lot more surveying, looking for more drill targets and potential drilling of the B conductor, maybe at the start of next year. Again, we're looking at sort of options that are available to us. Well, meanwhile, down at Dittel, thanks to the drilling that we've done this year, we've actually met all of our spend commitments already. So in terms of the Dittel project, we will do a bit of follow-up survey work, but that will be very much sort of lower down the pecking order. At the moment, our main focus is on making a discovery in the Kalahari Copper Belt, where we believe we've got our greatest chance of success.
Okay, excellent. Well, you did mention there about the diamond drilling. How come you made a change here, and what's the rationale behind the diamond drilling approach?
So one of the challenges with exploring in the KCB is that we're looking for this Dakar Nguako Pan contact. So you have these two ancient rock formations. The Dakar sits on top of the Nguako Pan, and that's where the main control for mineralization. Now, one of the things, it's all in the available public literature, so anybody who's just done, you know, even some preliminary basic research will know about this. The Dakar can be up to 1,500 meters deep. So it really can be very deep. So just because you found Dakar, it depends whether or not you found upper, middle or lower Dakar, ranging from younger Dakar through to much older Dakar. What we're looking for ideally is basement Dakar, and that we believe is then much closer to the Nguako Pan. One of the big challenges about in exploring in the area that we're in, I mentioned already, is the presence of these Kalahari sands. So because of that sand cover, because the geology isn't so exposed to view, although we have done through our mapping, we have been able to identify signatures at surface, it's always a bit of an unknown about where the Nguako Pan and Dakar formational contact will actually be. Now, what we're hoping is that through our use of the CSAMT technology and the really significant advances we've made with that over recent months, that gives us a very powerful tool for plotting where this contact might be. So the reason that we've shifted to diamond, and we're doing much more diamond, is because what we're also looking for are alteration systems. So even if we don't hit the Nguako Pan Dakar contact, if we have evidence of alteration, we get the actual physical rock cores coming up to surface, and we're also orientating the core as well. So that gives us, again, very important clues as to the orientation of the subsurface rock formations. All of this we piece together and we use as exploration vectors, targeting vectors, as we move in towards the areas that we believe could host the mineralization. So the data that we're getting from this current drill campaign, we believe it's going to prove to be invaluable to us. We've started off on PL082, but we have all the rest of our ground to cover as well. And again, there's a lot more that we'll be talking about over the coming months as we do more work, really sort of unleashing this new technology in a way that hasn't been done in the Copper Belt before.
Excellent. Okay, well, thank you very much for that. So let's go to some of the questions, because there were quite a few that came in, and hopefully some more will pop up as we are going through them. So I'm going to just go through ones that were sent to me. So I'm just going to read them here off my screen. Could Ben please update us on how many holes have been drilled in the PL082 in total? How many with RC? How many revisited with diamond? It feels a long time since drilling 6 holes began, so it would help to know if those original 6 holes are still ongoing. Or if the rigs have been deployed somewhere else.
No, so at the moment we're still in 082. We're on the 5th hole. We are still on the 5th hole. We're taking it deeper than we expected. We'll be providing full updates to answer all of those questions via RNS, I hope in the not too distant future.
Okay, excellent. Nice short and sweet answer there. That's what we like. So I've got a couple of other questions that are a little bit long, so just bear with me as I read them. 2022 was meant to be the year of discovery. Is that remotely still possible? could we get a summary of the drilling operations at PL 800, which you've just done? Typically, what depths and what has got left? What have you got left to do before Christmas, for the Christmas break? I note it's been an unusual. I note it's been the usual Kavango shambles, and I don't want to let Turney off the hook by discussing C7, which we will talk about in a minute. But I think this person really wants to know what can you discuss about the drill results pre-assay.
Yeah, well, I mean, what a foolish way to express a question. I know it's not your fault, Mark, and we come across this regularly. We're going to be talking a little bit later on about the importance of social media, but I mean that's just a ridiculously phrased question. I know who that's come from. I recognise the style of it. It's just very sad. In terms of the question itself, there are some valid questions there. So we will provide a full update in terms of the current drill campaign and all those questions about depths that we've hit, what we've seen so far, what we've identified in the rocks. Obviously, we will then need to go for assay testing. There will be some delay around that simply because we've got that month break. And with the best will in the world, there is a lot of drilling activity across Southern Africa at the moment. So assays are taking about 2 months to come back. If we hit anything that was clear, so if it was a clear discovery, obviously we would announce that straight away. But at the moment, what we're really focusing on is really zoning in on these target areas. The CSAMT is giving us a very clear guide. We've had some interesting results so far that we are looking forward to talking about. In terms of the usual Kavango shambles, as this guy likes to put it. Well, this year we've drilled 6,000 meters across our projects. We've just done the best raise that anyone in London has done in our space. We've raised £3.5 million. We brought in 2 new strategic notifiable shareholders. We also brought in 2 other strategic shareholders who aren't actually notifiable. Obviously, I'm not going to release their details. These are all people that I've pitched to. Our company is, punching well above its weight. We've got 14,000 square kilometers of ground in incredibly complex technical terrain. This sand cover, it really isn't easy. And this is how Kavango got this ground in the first place. It's because the majors and sort of larger firms with bigger budgets, they've gone for easier ground elsewhere. Sandfire, our major, I wouldn't say competitor, but the major sort of player in the Kalahari Copper Belt. They're a multi-billion-dollar Australian firm. They've got a $27 million a year exploration budget for Botswana and Namibia. They got first mover advantage. They got the best ground. The ground that's been open to companies like ours, we have to be very intelligent about how we use our exploration expenditure. We're working with much less money than firms like this, but that also means we get to take a few risks as well. So some of the technology that we're using and the CSAMT, talking about me, letting me off the hook talking about CSAMT. I mean, I just don't know what to say, Mark. This technology is potentially groundbreaking, and there will be more that we're putting out about this in the near future. But in terms of the way that we're performing, we've recruited in genuine world experts to the business who've looked both at the KSZ and now at the KCB. We haven't released the name of the guy that we've been working with over the last few months, but he's provided us with an invaluable source of information. So if we have a chart, if the metal is there, we've been saying all along, we're doing everything we can to find it. In terms of the year of discovery, 2022, well, look, realistically, my job as CEO is to set a goal for my team. I recognise that the way that Kavango had been performing under the old guard, it was just a bit of a sleepy retirement project. Let's be honest about where this company used to be. So yes, we did make a very punchy target for the year. And in terms of whether or not that's a failure, I would actually say no, we haven't, because our team has stepped up to this. Our team is laser focused on making discoveries. We want success. And so obviously to achieve that success, we know it's not going to be easy. So we're having to work through this very difficult ground. We're deploying new technology, but we've really gone at it this year. And I believe this is why we've raised as much money as we have, because we've done everything that we said we would do. So this guy talks about a Kavango shambles. We've drilled 6,000 meters across our projects this year, and we haven't hit anything yet. But with everything that we've learned so far, we are now in the strongest position that we've ever been as a company. And we've now got the most money that we've ever had as a company as well. So I believe that the stars are aligning for us. And if those metal deposits are there, then I believe our team is going to find them.
Okay, well, thank you for that, Ben. Of course, to have that money going into what could be quite choppy waters is very significant for a junior explorer such as yourself. And the story will change quite rapidly if that discovery is made. Just another sort of question. where was it? At what depths did you encounter the Dakar Nguago pan contact zone in the recent drilling, and why have you gone deeper in the 5th drill?
So on the 5th drill, we've been guided by the CSAMT results. We haven't hit the Nguago pan Dakar contact. Obviously, it's difficult for me to prejudge what would be an announceable event, but given what we've been doing around the CSAMT, I do believe that that would be significant. We've obviously got some very clear views on exactly what it is we need to do next in terms of drilling. So again, this is something we will have to update about, with R&S, but we will do that this side of Christmas.
This side of Christmas. Okay, well, not too long left, but that would be nice to get some more news before we sort of break away for the Christmas period. So we said we'd talk about CSAMT, and I have a question here. Again, it's a fairly lengthy question. This person would like me to ask about the CSAMT announced on the 25th of November. The stated aim was to run a CSAMT survey over the ground using a known Dakar Nguago contact on Sandfire ground to calibrate so that you know how to interpret what you see from your own license area. We were told that survey was a success in that we could see the strata down to a previously unexpected depth of 4 kilometers. But there was no comment on whether the calibration worked. Was there a clear signature from Sandfire's contact zone that we could see extend into our area? Or are we seeing a depth of 4K, but not in a way that is a clear extension of what is known to be the Dakar Nguago contact zone?
So this is a bit of a complicated question, or a bit more difficult question to answer. We will provide a detailed R&S on it. What I would say is what we've said previously. We promised that we would share the data with Sandfire once we completed the survey. We have done that. We presented the findings to them. What we haven't yet agreed is what we're actually going to put out in the public domain, because obviously it's not right for us to comment on what we've seen on another exploration company's ground. So we need to go through an approval process. All I would say is if you refer back to the last R&S that we put out, we can now see through further calibration that we've achieved with the laying out of the receivers, how we've processed the data, how we've then interpreted the inversions. About this time last year, we were looking at around about 500 meters depth where we could see very, very clearly the strata. Now we can see down to 4 kilometers. Just one point in the question I would like to correct. They said it was a known Dakar Nguago pan contact. It was actually much more than that. The Kronos deposit is a known copper occurrence, so it's mineralized as well, and that's absolutely key to understand, Mark. It's not just the Nguago pan Dakar contact, because that's throughout the region. What we're looking for are mineralized areas of that contact zone. So that's been a very worthwhile exercise for us so far. As we said, we said it has been a success. We will be putting the detail out of this as soon as we've made final agreement.
Thank you for that. When are the results from KCBRC 005 due, and are you still planning on releasing info if interesting cores are found?
So obviously, if we see something that's absolutely crystal clear, like it's clearly a discovery, we obviously have to release that immediately. But these sorts of results, for the most part, tend not to be so clear cut. I mean, you had a result like Cobre had down in Australia. They hit, I think it was 10 meters, their intersection, and it was clearly that they had made a discovery. For the most part, this type of drilling, what it will lead to will be clues sort of where you vector in on sort of better targets. That really is how this works. I think there can be a bit of an expectation here in this type of business that, you expect to go out and hit with the first 2 or 3 holes. And yeah, some companies are lucky, that can happen. But the way that we've set everything up with Kavango, the way that we've now financed ourselves, we are now in a position to play the numbers much better. In terms of the update, what we're actually going to release on the holes, we are going to provide a full update at the end of this campaign. Our plan isn't to update during the campaign. But as I also said earlier on, given what we've been doing with the CSAMT and given the importance of being able to identify this Dakar and Nguago pan contact, we would be the first company to have achieved this, to be able to see this from surface. This has been one of the biggest challenges that there's been in exploration in the Kalahari Copper Belt, is you've seen a lot of companies that have drilled holes and they've just not known how deep to go. And quite a lot of holes have actually been stopped. Should those holes have been stopped, most sort of geologists, the rig crews, they wouldn't be able to tell you because they don't know what's beneath them. We think we've developed a way of deploying this CSAMT technology that can help answer that question. So that would be, I think, quite a significant event for us.
Thank you very much. So another question again on that hole we've talked about before, that 082. The drill campaign kicked off around the 12th of October, 6 drills in total. Total depth about circa 1,800 meters. It should have taken 6 to 7 weeks. Kavango seemed to have made very slow progress. What's gone wrong, and why haven't you informed the market? This person says, please do not blame the prospectus, and ask exactly that. How exactly did that disrupt the drilling 5,000 miles away? Surely you had a drill plan, and was it up to Mandea to execute that plan?
Yeah, well, I'm afraid this is the same guy. I know the source of these questions. I've dealt with these questions directly. So in terms of the drilling and the prospectus, I'll answer in reverse order. The problem that we had with the prospectus was that under the rules of the FCA, had we completed any work programs and we had any definitive results to publish, we're obviously obligated to publish those by RNS. That would have then led to further 2-week delays in publishing the prospectus, closing the fundraising, and obviously getting the funds into Kavango. Now, the problem with Kavango is because we're doing so much work across all of our projects, as you've seen from the past, we issue RNSs regularly because we, continue to bring results in from the field. So what we had to do is on a number of our operational programs, we had to effectively to suspend those and move on to other areas of work. That has been quite disruptive. But in terms of the drilling, no, I mean, to say, we're 1,800 meters and what's gone wrong, I mean, that's just stunningly ignorant. First of all, nothing has gone wrong. Everything is still going according to plan. We will put an update out into the market in the not too distant future, but we're not at 1,800 meters in this campaign. So far, we've announced a 1,250 meter campaign. So far, we've stuck to that. Now, we are looking at other plans, so there might be some news on that, I think, coming up in the not too distant future. But what we have had to do is we've obviously been guided by the CSAMT results. You asked earlier on, Mark, with your question about why we've switched from the RC over to the diamond drilling. These operations, it isn't that simple that you just simply sort of turn on a light and all of a sudden we're drilling diamond. You then also need to consider the ground conditions as well. Now, again, we will be putting more out to explain this, but there were some zones that we hit on our way down that did sort of cause a few issues. We've had a lot of water loss. I mean, a great deal of water loss, even more than we lost in the KSZ on the last hole that we drilled there. Again, we'll put more information out about that as we can explain all of this. But so far, no, everything is going to plan. We're on course to complete this current phase of the drilling as expected, and then we'll put an announcement out about what our next steps are in terms of both targeting and future drilling alongside that. So at the moment, everything's going to plan. Brett's down on site. We've got Brett's eyes on the core as well alongside our team. Brett's obviously very experienced. So it's great that, he's gone down there just for the final phase before Christmas. And he's also gone down to talk to the drillers as well and sort of talk about what next steps will be. So it's all happening at the moment. And what we need to do is we just need to get over this hump that we've had in terms of a hiatus for the news flow. The prospectus was pretty disruptive, but we are a standard list company. This is just sort of part of the rules of the game. So, but we're now expecting that things will start to motor again.
Okay, excellent. Just with regards to the recent placing and the recent raise, much of this raise was taken by a few strategic investors. Are you able to expand on who they are and what their activities are in the mining space?
Yeah, so look, I'm not going to talk directly about sort of what individuals do. I mean, the information's in the public domain, as it wouldn't be right for me to talk specifically about that shareholder asking these questions. So we've obviously announced the TR1, so you can see who's invested. So we're delighted to have brought the Consagra family onto our books. So they were introduced to us through a very close contact of ours. They've really sort of stepped up and have provided fantastic support to the company and have indicated future support as well. So we're developing what I hope will be a very strong relationship with them as we move forward. We also have welcomed on board Origo Investments out of Southern Africa. So again, they have a website. You can certainly sort of see what Origo do. This was a lead that I brought in directly through one of the one-to-one events actually that I attended. This is where I originally met the guys from Origo. And again, we've got some really interesting plans that we can be working on with these guys. What's great for Kavango is that we've now tightened up our shareholder register. Of course, Power Metal Resources now has 9.85% of the company as well. So we have the backing of people with pretty deep pockets who understand the business. They understand the complexity of what we're doing and what we're trying to achieve, but they also understand and they can appreciate exactly how far we've come as a business. And I think this is something that the market really hasn't woken up to yet, is this £3.5 million. This really is a major watershed for a company like ours. There isn't another company, another exploration company in London, and there are very few around the world in terms of us similar size to us who've been able to achieve anything like this. So this really is a significant deal for Kavango, and we're looking forward to putting those funds to good use next year.
Excellent. Now, with regards to Mike Moles, you were looking to replace him.
Well, Mike left at the end of August, so yes, we will be looking to bring in new non-execs. Yes.
Okay, excellent. And just a final question, I hope that puts us nicely on time for the roundtable discussion. Just on the KSZ, are you able to update on any activities on the KSZ?
Again, we'll be putting an RNS out about that very soon. As I mentioned, we've had a bit of disruption with work programs, but there is work that we've been doing following up from Richard Hornsey's report in the summer. So we have one full-time team down in the KSZ, but we've also been starting some other work programs as well. And we'll have some updates on that in the near future. Things are looking quite interesting between KSZ North and KSZ South. And yeah, I need to put an update out about that sort of over the next week.
Over the next week. Okay, well, thank you very much, Ben Turney. That puts us nicely on time there to bring all our other guests back in for a bit of a question time roundtable discussion on a few points relating to the mining space. So we have back Mark Sale, Ryan, me, as well as Ben Turney. So first question I will pose: are we headed for a major supply shortage of base and energy metals, given the investment required to take the world down the green shift? And let's face it, years of underinvestment in this space. Ryan, let me come to you first. What do you think?
Well, I think it's pretty well documented that, for example, copper levels are at the lowest storage levels that they've been historically. I think there's a matter of months in storage. And, you know, so there's clearly a supply problem there. And that's kind of emanating from the fact that, you know, you've got a decade plus of significant underinvestment in that industry. And, you know, as you said, that there's this kind of electrification and this kind of global ambition to get to net zero. So what you're seeing is, you know, a decimation of the supply, you know, a significant increase in the demand. And I think, you know, that goes for a number of the metals, actually, for literally every base metal. You know, for every battery, you're looking at nickel, you're looking at graphite, you're looking at lithium, you're looking at copper. And, you know, it's not just, you know, around the batteries, right? Just constructing you know, new copper mines, you're going to need materials to build these mines. So in actual fact, you know, the actual demand of these metals may well be, you know, quite understated by some margin. And, you know, even if you had 4 world-class mines ready to go into production tomorrow, you're still going to see, you know, a bit of a period of time for those metals to filter through into the market. So, you know, there is a shortage of metals. There has been a shortage of investment, and there's certainly an increase in the demand with the way that the global economy is going.
Okay, excellent. So it's a matter of months of copper in storage. You've heard, have you? I haven't heard that one. I'm familiar with, of course, the blow up of the nickel price on the London Metals Exchange earlier in the year. That was very interesting. But a matter of months' supply of copper. Mark, what do you think? What are you seeing in this regard?
Well, I'm not sure about. I'm sure Ben's right in those statistics. Excuse me, but I don't know whether it's an urban legend. But I did hear that the expansion in China requires the equivalent copper of the total British national grid every year, which sort of puts it in perspective of the copper demand that's out there. And I did see somewhere a cross section of one of these underwater copper cables, energy cables, and it's phenomenal the amount of copper is in 1 meter of one of those. So yes, there's, as everyone's saying, there's been an underinvestment, but I actually think this is a prime time for exploration companies, because as this shortage becomes more acute, the users of these end materials are going to look to invest in the exploration companies in order that they can secure their supply. So I think it's a great time for the likes of the three companies that are sitting here, be it the Chinese, the Canadians, the Americans, the British. They're going to come knocking on our doors when they think that we have maybe not as close as feasibility. Let's get in early, guys, and invest in a company that's got a go-get attitude that has a better than average chance of securing a deposit in the future.
Well, we have heard of this, haven't we, about end users, end manufacturers such as Volkswagen looking to partner directly with mining companies to secure their supply of these of base metals. I mean, in terms of, though, an actual shortage, you have years of underinvestment, years of under exploration and lack of discoveries. We could be in a pretty stark situation, though, couldn't we, where we literally do not have enough of these metals to do what we want to do with the green shift.
Agreed.
Yeah,
I think the situation, Mark, is actually even worse than you're painting it, because for two reasons. If you look at the actual number of discoveries and the size of those discoveries over the last 30 years, there's been a clear declining trend in terms of both the quantity and the quantum of the discoveries that have been made. Basically, pretty much all of the low-hanging fruit has now been picked. So for companies like ours, having to look, for example, in the Kalahari Copper Belt, having to work underneath sand cover, you've got to ask yourself, where are the next discoveries going to come from? The next question you then have to ask yourself is, how long does it take from discovery through to first pour, first production at a mine? And there are stats out there that suggest it takes about 8 years. So I think we're already facing this very serious supply deficit today. The LME stats are regularly published. We are down to a few months worth of supply as things stand today. But I think, whether or not you sort of believe what you read in the media, or, you can trust the stats that you're reading, there is one key stat in all of this that everybody needs to be paying attention to, and that's the copper price. It is that simple. Dr. Copper is traditionally recognized as being one of the best indicators of economic activity. Now, with the best will in the world, all of our economies at the moment are shot, all of them across the world. We're all facing sort of post-pandemic supply chain disruption, great inflation, increasing unemployment, slowdowns across the board. But look at what the copper price is doing. I think it's the canary in the coal mine that is telling us we are, from a supply perspective, we are in for a really bumpy ride. And those companies that can make it through the current liquidity crisis, I don't quite agree it's a great time to be involved in the sector as a whole just yet, because the big problem facing most businesses like ours is finance. That liquidity crunch that's happening is serious, and I think we're going to see something unprecedented. Those that survive...
I think there might also... Oh, sorry.
No, sorry, fire away, go on.
Yeah, I think there might also be a kickback, which might be a benefit to certain explorers, in so much as, yes, we're talking a significant shortage for the green metals, the battery metals, whatever buzzword you want to use. But then there could well be a retreat to the gold haven because of the increased uncertainty. So that's where first class, we're looking for both battery metals as well as precious metals. So I agree absolutely wholeheartedly with what you're saying about market conditions, financing, bunker funds, making sure you can last through. And we don't know, hey, are we at the bottom yet? No one I know is telling us we're at the bottom. So we don't know how long these bad markets will continue. They talk about the green shoots in the spring, but I don't think there's a lot of evidence of that yet. But so as I say, a company that's looking for energy, I mean, there you are in Saskatchewan, uranium, ourselves, battery metals and gold. I think those are the people that are quite well placed going forward, especially if you've got a degree of success, so the market can recognize that success, and then you will be the obvious candidates for any funding that is available.
Yeah, I completely agree with what you just said there, Mark. And I've seen forecasts for gold at $2,300 latter end of next year. Now, these are just forecasts. Everyone has a forecast. Everyone has a prediction. Economists all have different opinions. But for sure, if we have this liquidity crunch and this cost of capital that we've discussed before on one of these programs, gold is certainly going to do well. But there's also another element. I mean, I heard the other day that the Camborne School of Mines is actually no longer doing some geology courses, purely because there's no interest in people doing geology. Now, is that because it's a boring subject all of a sudden, or is it because no one sees any prospects in there? You could have an expertise lack as well.
Not
Yeah.
good, Mark. We already do.
Yeah.
It's a huge problem already in the industry. Over the last 12 years during the bear market, you've seen a large number of professionals who've actually completely left the space. That's left very few sort of more senior geologists who are experienced in exploration. So for us, we've been incredibly fortunate to have brought someone like Richard Hornsey on board to help us with our projects. But this problem actually is then exacerbated because where there haven't been sort of the older geologists, the sort of more experienced, they haven't been around to bring through the younger generation. So you have this lack of interest in the space, lack of job opportunities. You've got this huge skills gap now that's already in place, which is making it difficult for companies like ours to find the people we need on competitive salaries. I mean, there's a perfect storm brewing in this space. There really is. And if any companies can actually make it through, I think we're going to be in for one of the most incredible upswings and upturns ever experienced. I think crypto has obviously did a lot to dampen the last run, but obviously that's not going to happen again after what we've seen over recent months in that particular space. So yeah, no, I mean the whole sector itself has taken a number of quite serious body blows and is reeling from them. And
hey, Ben, that's why there's grey-haired buggers like me still around. And I can say that because I think I'm the only grey one on the group. But I remember a number of years ago, Dick Silito, who I'm sure you've all heard of, he was the first non-American president of the SEC. And in his inaugural, not speech, but newsletter, he said, and this is going back to early noughties, he said, we are facing a major crunch in the years to come because in 10 or 15 years' time, we won't have geologists with 10 or 15 years experience. And I think addressing your comment, Mark, the problem is it's such a cyclic industry, is that when we're in a boom, people say, hey, study geology, there's a shortage of geology. And then by the time they graduate 3-4 years later, we've gone out of the boom, we're in a recession, and there's no work for them. It's like I was trying to explain to somebody today about why is there such a backlog in the laboratories. That's because we live in a boom-bust industry, and when things are booming, there's never enough laboratories, there's never enough drill rigs, there's never enough technical staff, geologists or geophysicists. And then all of a sudden the crash comes, and guess who gets laid off first? The exploration geologists. The drillers get shut down, the labs regress. So that is one of the problems. Though I must admit, it's rather depressing to hear that Camborne is reducing its geological intake, because it is an iconic sort of house, shall we say, learning house in the UK.
Yeah, it really is. Lots of people I speak to on StockBox here have gone through the Camborne School of Mines. It's a big one for getting people's feet wet in geology. A lot of people start there. We're in a very interesting time, aren't we, given what's going on with the demand to come, but also the liquidity crisis. But we've also got the energy crisis as well, and of course the cost of living and the cost of raw materials for energy. You talked, Ben, there about Dr. Copper, and of course that is used a lot in energy production. But of course uranium as well. I've heard we're going to see a huge demand for uranium, and there's nowhere near enough supply of raw uranium materials to go into nuclear power plants to get us out of this situation, which I've read could going to last 3 to 5 years. These high electricity bills, high raw costs is going to last for quite a few years to come. How do you think this plays into it? What are you seeing on the pricing of some of these commodities? Ryan, let's go to you first on uranium.
Yeah, so again, with this push towards a race to net zero, a lot of countries have been looking at solar and wind power, but that significantly they don't produce enough energy really to support any significant populace. So I think what we've seen over the last 12 months is governments recognizing actually that uranium is a very good way of reducing that carbon footprint. I think one uranium pellet is produces the equivalent energy as 120,000 barrels of oil, for instance. And what you also see is that the power generated by uranium in terms of footprint, because don't forget, if you're going to go and roll out a load of wind farms, it takes up a lot of land. Like these uranium facilities have got a very small footprint. They've got a high energy output, and they've also got a sustainable energy footprint output as well, which is really crucial to supporting society. So you've seen people like Sprott, who have launched their Sput fund, which has basically been going into the uranium market and removing that uranium ore out of the market. You've seen since they've been doing that, you've seen the uranium spot price increase from like mid-20s to I think it's upper 40s in terms of dollars per pound at the moment. I think it touched around 65 not so long back. And I think what you're seeing right now is, alongside this recognition that actually, uranium could be a very good way forward for everybody. You're looking at Japan, they're restarting 30 nuclear reactors. Germany have extended the life of their two largest uranium reactors, which they were due to decommission this year. You see in the USA, even soften their stance on uranium production. And, I get the general feeling that, there's a lot of volatility in the price at the moment, but there's a lot of hope attached to uranium and going forward. And I actually think that, there's a good number of funds with quite a bit of money waiting on the sidelines, waiting for this spot price to stabilize a little bit before they really get involved in this uranium space. So I really think we're at the foothills of kind of a new uranium focused generation for electricity.
Well, let's hope so. Let's certainly hope so. So the price of uranium doubling there, as you mentioned in recent times. Have you done any sort of back of the matchbox calculations on some kind of forecasting? Because obviously, with your projects being in uranium, you must have an upside sort of target in mind, or kind of a forecast. What's your research been telling you?
In the uranium industry, since a number of events have happened in the past, the world turned their back on uranium production, and what you're actually seeing is that a lot of uranium production facilities were put on care and maintenance, and for these to come back into production, they need north of $70 per pound. We're at 46, 47, in that region at the moment. So we've got a significant uplift in the price to go yet before these huge facilities can come online and actually, be profitable for these companies to take off care and maintenance. And what you've also seen, up until now is, there's a very good Twitter post called John Quakes who explains this a lot more eloquently than myself. But it's to do with underfeeding and oversupply. And what you've seen is, a lot of uranium producers producing uranium and actually buying their own, rather than producing and filling contracts, they've been buying uranium off of other producers at much lower cost than that it would cost them to fulfill their own contracts. So what you're seeing is the removal of this kind of oversupply mechanism. We're now moving into undersupply. So there's a lot of reasons to be excited about the uranium space. I think, over the next 12 months, that's going to quickly unfold. And, just looking, at the increased energy costs, that's directly linked to inflation. I think, it's bad news for your pocket. I think it's great news for gold explorers. It's a safe haven. Perceived safe haven for investors. It's to protect your erosion of value. but you're also seeing, quite a few news articles floating around about, certain countries looking at gold-backed currencies or using gold in it, to pay for oil, and it's going to be really interesting to see how that unfolds also. And I know you mentioned earlier about gold price around 2,300, over the next year, and I'm 100% behind you on that. I'd actually go 2,400 would be my guess, but
Okay, well that's good. We won't hold you to that, but it's nice to get predictions, and then we can come back in a year's time and see where we are. Of course, Fulcrum has a lot of exposure, as we said at the start, to lots of different commodities. But Ben and Mark, what do you think? Do you think we're going to see some volatility in some of these prices? Do you think we're going to see more shenanigans on the LME when prices are suspended because of volatile, or disorderly market? I think was the quote actually. Is we're going to see disorder?
Well, I think, it's absolutely clear that yes, we will. And the main thing I was looking for, I'm not too wild about making predictions about actual price movements, because it really is it's impossible to do. No one can tell the future. So the main thing I was looking at this year, watching both the nickel and the copper price, which are most relevant to Kavango, was to watch how the price performed once it pulled back. I've been involved in financial markets now for 15 years. One of the most bullish signs you can have on any chart, and it doesn't matter whether or not it's a stock or a currency or a commodity, is when a price breaks through long-term resistance. It goes on to make new highs, series of new highs. When the price then pulls back, if that long-term resistance starts to act now as support, so in other words, the price bounces off that previous level, and that's an incredibly bullish sign for whatever market is you're looking at. We've just seen that both in copper and in gold. In copper, it was around about the $3.50 a pound level, and in nickel, so I said gold, I meant nickel, and in nickel, it was around about the $20,000 to $21,000 a ton. Both have bounced off strongly since then. Now, with everything that we know about the supply deficits that there are, I think this is a great place to be involved. I keep talking on social media that there is a tidal wave of money heading in our direction. At the moment, maybe a tsunami is a better analogy. At the moment, it feels very much like the tide has pulled out. Most companies are gasping for finance right now. In London, we've had the worst year since 2003 for raising finance. That's how bad things are. It's much worse than even in the financial crisis. But those companies that can make it through that, when that tide comes back in, there's a rush coming our way. It's just huge. The other thing to consider, of course, is the operational gearing on the miners. After 10 years of really lean times, a lot of these businesses were set up very lean operations. So they're heavily geared towards the increase in the metal prices, which means they're throwing off profits. And we're seeing that across the space. Again, that money has to go somewhere. It will go out on shareholder dividends and, of course, executive pay, as it always does. We're now starting to see some large-scale M&A activity with initial bids being rejected and being, increased significantly. But that money is heading towards junior exploration. And if we can make it through, if you can finance your companies, you can keep making progress, because that was a very good point that was made earlier. You do need to demonstrate technical success as well. We really could be in for, I think, a golden era of investing in this space.
Well, I would echo what you're saying, Ben, wholeheartedly. Tidal wave, tsunami, cork in the bottle, and the ones best placed will be the ones, as you say, the ones showing technical success, good projects, good management, technical success to date. They'll be the ones that the money will, I won't say get thrown at, but they'll be the ones at the front of the queue for the investment going forward, because that we're the ones that will deliver in the future. Yeah.
Indeed.
And I think,
Mark, carry on.
building on your comment about the worst year to raise money since 2003, I'd just like to pat James Knowles on the back for the job he did with the raise for first class metals. We didn't raise as much as we wanted to, but I said to James, we've got to get this away. As long as we can fulfill the FCA requirements, we've got to get this away, because otherwise we're going to be in a world of hurt. And well done, James. We got it away. And since then, sorry again to get on my soapbox, first class has, I think, been one of the better performers this year since it's raised. We're sitting 50% above our listing price. I'll retrace that, because pride comes before a fall. but we're just growing. You're safe, Ryan. We've decided not to go into the uranium space, so there's no competition with you in Canada there. But watch this space for other acquisitions.
You guys did brilliantly with that raise. I mean, I don't think you've had anywhere near enough credit for it, because if I know obviously you're on standard list, you did brilliantly to get it away. But on AIM, there's been one IPO in the mining space this year. So again, that puts it into context just how difficult this is. So yeah, I think you made exactly the right decision. And just to jump on that point a bit, I think the mistake that the majority of our peers have made, and I'm afraid they're all doing it at the same time, they've all been sort of putting off their raise. I was in the same position with Kavango as well. I mean, I understand the pressure of all this. It's really difficult. The problem a lot of companies in our space now face is they've left it too late. They're all waiting for Q1 next year. I hear this across the board. You know, they're going to be doing their raises next year. We've just come off this anemic period of money coming into companies. I think it's around about 2.2 or 2.3 billion that's been raised across the entirety of AIM over the course of 2022. You know, with the best will in the world, the liquidity just isn't out there at the moment.
Ben, tone it down. Remember, Ryan's going for a listing.
So, sorry, Ryan. might be worth just hanging on for 3 months. But you're going. A lot of companies are going to be heading for the same door at the same time. I think it's going to get tough out there. I think. Could be wrong, but there's a prediction, Mark.
No, I think it could get tough. I mean, Ryan, you are fairly well down the track of the IPO, but I think, yeah, just talking on that, I think First Class Metals, again, not to blow too many trumpets here, but what a great way to IPO a company. You know, with all the pre-media you did, the current media you do, and of course the fundraising, getting that away, and the exploration as well. You know, the share price performance speaks for itself, and I think Ryan, you could coming on here today and talking about the company in the pre-IPO stage, I think is a really good way to get that ball rolling, because yeah, you can follow in that First Class's shadow as an example of how to IPO a company, nice, and literally hit the ground running. It was very impressive, and for Ben as well to get your raise away in this market. Well done again for that. A final thought: we are very close to the end, but just because we're talking about telling the story and hitting the ground running, I think I was talking today on a podcast with someone about Atlantic Lithium. I was talking to him about investors' appetite for instant gratification and news, and there is so much at our fingertips right now. Companies have to be active on social media and telling their story. I mean, how important is it for I know First Class, you do a lot of that stuff, but Ben, for example, let's come to you first, you know, to connect with investors, to try and give them that kind of little bit of instant gratification, that little bit of satisfying that need that they have for news or something to grasp onto, particularly during leaner times. That's something that you really take quite seriously at Kavango, or, you know, and intend to carry on.
Absolutely. No, look, it's vitally important, but it's also a double-edged sword. One of the things I always say about this space, and I've worked with a lot of companies over the years, one of the biggest mistakes that particularly technical people can make is they don't actually recognize the nature of the business that they're running. And in our space, you're running two companies. On the one hand, you've got whatever you're doing in the field. You need to do that to the best of your ability. And this is a complicated game that we're playing in the exploration space. But you're also running a public company. It operates by a completely different set of rules and has a completely different set of requirements. And I think a lot of executives can get very comfortable in sort of doing what they know, and they tend to ignore what the requirements on the PLC side are. Of course, I say it's a double-edged sword, because on the one hand, while obviously you're looking to connect with your investors and provide regular communication, unfortunately, the nature of these platforms is that they can become a megaphone for minority parties. And I mean, one thing that I found particularly sad with Kavango is I used to read the LSE board. The LSE board for Kavango used to be excellent. There were some really knowledgeable posters posting on there, sharing technical information. There were times when, you know, there was criticism of Kavango that was entirely justified and completely right. But for the most part, it was a place that, you know, our shareholders could go and share information and ideas. Unfortunately, that's been completely polluted over the course of the last 6 months. There have been a few holders who are very aggrieved about the share price. I understand that the share price is painful. It's really difficult. But the nature of the sort of the personal attacks, it makes it really difficult for companies to take that step and continue communicating. Now, in my case, I've got pretty thick skin. As you know about my background, I used to be an investigative writer. I ran a number of shareholder action groups. I've had all sorts of nonsense written about me over the years. So I just, it is just par for the course. But for a lot of companies, particularly the guys who aren't so experienced, and I'm afraid it is mainly men, but the guys who aren't so experienced in the small cap world, they can find this kind of abuse really quite hurtful and very, very demoralizing, which encourages them just to move back into their shells and stop communicating. So I think there is a bit of a two-way responsibility here. On the one hand, yes, it's vitally important that companies, they do their bit and they communicate, but at the same time, it's also up to investors, frankly, to behave appropriately and keep a decent level of debate. Unfortunately, a lot of it, particularly in difficult times like this, it can descend into some pretty unpleasant stuff. It's a minority of voices, unfortunately, but it just ruins it for everybody else.
Okay, well, thank you for that, Ben. It is important, is an important point to consider. Ryan, does that put you off doing social media and various vlogs, perhaps, as you progress with your projects? What do you think? How important is it, and how much of a focus is it going to be?
Well, of course, it doesn't put me off, right? Shareholders have a voice; they're entitled to use it. And I have ears, and I'm entitled to use them also. I think that we're now in the age where people like to know exactly what you're up to. Shareholders like to know that the companies are active. Social media gives you that platform. As Ben points out, there's certain limitations as a PLC that you need to abide by, certainly as a listed company. But you can operate within that sphere. You can provide updates, photos of people on site, things like that, which will give shareholders comfort, knowing that firstly the company is active, what you're spending company funds on, and get a general gist of what you're doing outside of your normal RNS announcements. Mm-hmm. So I think it's pretty vital. You're always going to get a few outliers. People are always going to be using information for purposes that you'd rather that they didn't. But it comes with the package, right? You put yourself up as fronting the PLC, so you're going to have spears thrown at you, and if you go make a nice big discovery and large shareholder returns, you're going to get a good few thanks as well and a pat on the back. So it just comes with the territory. I know we're not listed at the moment, but we've been operating as a private company for over a year now. We've raised money from we have shareholders already, so we try to keep them updated. But I think it's it's a vital lifeline to shareholders, in my view. And I guess you just need to let people say what they're going to say, and turn the other cheek, so to speak.
Okay, excellent. Mark, any final thoughts from you? We're going to see you in the field rubbing? I don't know what you're rubbing on your face. I think someone was complaining you look too clean in the field. Was that what it was?
Yeah, I was rubbing some sphagnum and moss on me. I agree with both the gentlemen this evening, Ryan and Ben. I edge away from saying it's a necessary evil. I think is an expected situation these days in the world we live in. I mean, you wouldn't have been doing it 10 years ago, but yeah, I applaud the attitude of Ben and Ryan when there are critics out there. But to paraphrase, I think an American president, you can please all the people some of the time and some of the people all the time, but no one's going to be happy all the time. And I would end my comment on social media with a warning: James, you won't get me dancing on TikTok, so don't ask again.
Okay, Well, on that bombshell, I'd like to thank you all for your time tonight. Very interesting talking to the companies, and particularly Fulcrum. They're getting an idea of what you're about pre-IPO, and I think the round table discussion there very interesting. I know we only got one prediction on the price of gold, but I'll see if I can get predictions from you other two off the record, maybe, and we can have a bit of a sweepstake on what happens in 2023. But some very interesting points discussed for sure. So thank you very much, Mark Sale, the CEO of First Class Metals, for your time this evening. Ryan Lee, the CEO of Fulcrum Metals, and Ben Turney, the CEO of Kavango Resources. And of course, everyone watching at home, thank you very much for your time, and we'll see you next time. Good night.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.